The AI revolution is creating a gold rush. But here's what most investors are missing. It's not just about the companies building AI. It's about the picks and shovels. And right now, there's a massive shortage of the most critical component in the entire AI infrastructure: advanced semiconductors. In this video, I'm breaking down 5 semiconductor stocks that are positioned to ride this AI chip shortage wave. These aren't just any chip makers. These are companies with specific technological advantages that make them essential to the AI economy. We're talking about companies producing everything from cutting-edge AI accelerators to the specialized equipment that manufactures these chips, to the critical memory and networking components that make AI systems actually work. By the end of this video, you'll understand why this shortage is happening, how long it could last, and which companies are best positioned to profit. But before we dive in, if you're serious about finding the next big opportunities in tech and AI, hit that subscribe button and turn on notifications. Let's get into it. So, why is there a chip shortage specifically for AI? 3 major reasons. First, the explosive growth in AI demand has caught everyone off guard. ChatGPT went from 0 to 100 million users faster than any technology in history. Every major tech company is now in an arms race to build bigger, more powerful AI models, and that requires massive computing power. Second, these aren't ordinary chips. AI accelerators, especially GPUs and specialized AI chips, require the most advanced manufacturing processes on the planet. We're talking about 3-nanometer and 5-nanometer technology that only a handful of companies can produce, and building new fabrication facilities takes years and billions of dollars. Third, the demand is coming from everywhere simultaneously. It's not just tech giants like Microsoft, Google, and Meta. It's every data center operator, every cloud provider, every enterprise company trying to integrate AI, and even sovereign nations building their own AI infrastructure for national security. The numbers are staggering. The AI chip market is projected to grow from around $50 billion in 2024 to potentially over $400 billion by 2030. That's nearly an 8-fold increase in just 6 years. And the bottlenecks in the supply chain mean that companies who can deliver these chips have unprecedented pricing power. Now, let's look at the 5 companies best positioned to capitalize on this shortage. Stock number 1 is Advanced Micro Devices, ticker AMD. AMD has transformed itself from a perpetual underdog to a legitimate powerhouse in AI chips. While NVIDIA gets most of the headlines, AMD is the number 2 player in AI accelerators and is gaining ground fast. Here's why AMD is perfectly positioned. When customers can't get enough NVIDIA chips due to shortages, AMD becomes the obvious alternative. Their MI300 series AI accelerators are genuine competitors to NVIDIA's offerings, and major cloud providers like Microsoft Azure and Oracle are already deploying them at scale. AMD CEO Lisa Su has orchestrated one of the greatest turnarounds in tech history. The company now has competitive products across CPUs and GPUs, and they're leveraging their relationship with TSMC to secure advanced manufacturing capacity. AMD's data center GPU revenue grew over 200% year-over-year recently, and the company is guiding for AI accelerator revenue to exceed $5 billion. That's for a product line that barely existed 2 years ago. The main risk? AMD is still playing catch-up to NVIDIA in terms of software ecosystem and developer mindshare. NVIDIA's CUDA platform has a decade-plus head start, but AMD is investing heavily in their ROCm software stack, and when there's a chip shortage, customers become much more willing to adapt their software. If you believe the AI chip shortage continues and customers need alternatives to NVIDIA, AMD is the most credible beneficiary. They have the technology, the manufacturing partnerships, and, increasingly, the customer relationships. Stock number 2 is Broadcom, ticker AVGO. Now, Broadcom isn't a name that most people associate with AI, But that's exactly why sophisticated investors are paying attention. This company is absolutely critical to AI infrastructure, just in a different way. Broadcom has two major advantages in the AI boom. First, they design custom AI chips for the biggest tech companies in the world. Google's TPUs, which power Google's AI services, Broadcom helps design those. Meta's custom AI chips, Broadcom. These hyperscalers are investing billions to reduce their dependence on third-party GPUs, and Broadcom is their go-to partner. Second, Broadcom dominates networking chips for data centers. AI systems require massive amounts of data to move between thousands of chips. Broadcom switches and networking silicon are essential infrastructure. As data centers scale up for AI, Broadcom's networking business grows proportionally. Broadcom's AI revenue has been growing at over 200% annually, and management has guided that AI-related revenue could reach $12 billion. This is a $50 billion company, so AI is becoming a massive portion of their business. What I love about Broadcom is their stickiness. Once they design a custom chip for a customer, that's a multi-year relationship worth hundreds of millions or billions of dollars. The switching costs are enormous. And in networking, they have over 50% market share in key categories. Broadcom is a pick and shovel play on AI infrastructure. Whether NVIDIA, AMD, or custom chips win the accelerator wars, they all need Broadcom's networking technology. That's a powerful position in a shortage environment. Stock number 3 is Taiwan Semiconductor Manufacturing Company, ticker TSMC. If semiconductor stocks were a pyramid, TSMC would be at the foundation. This company manufactures chips for almost everyone: Apple, NVIDIA, AMD, Qualcomm, and hundreds of others. They're the most advanced chip manufacturer on the planet. Here's the critical insight. TSMC has a near monopoly on the most advanced chip manufacturing. Their 3nm and 5nm processes are where all the cutting-edge AI chips are made. When there's a shortage of AI chips, it's often really a shortage of TSMC's manufacturing capacity. NVIDIA doesn't make their own chips. AMD doesn't either. They design them, but TSMC manufactures them. So TSMC captures value from the entire AI chip boom, regardless of which specific chip companies win. TSMC is investing over $40 billion annually in new fabrication facilities. They're building advanced fabs in Arizona, Japan, and expanding in Taiwan. But here's the thing. Even with massive investment, it takes 3 to 4 years to bring a new advanced fab online. That means the shortage persists and TSMC's existing capacity remains extremely valuable. TSMC's margins are exceptional. They command premium pricing because of their technological lead and limited competition. Their revenue from high-performance computing, which includes AI chips, has been growing at 50% plus annually. The elephant in the room is geopolitical risk related to Taiwan. This is real, and investors need to consider it. However, TSMC's geographic diversification efforts and their absolute criticality to global technology supply chains provide some mitigation. If you want exposure to the entire AI chip ecosystem without picking specific winners, TSMC is your answer. They're the essential infrastructure provider, and in a shortage environment, infrastructure providers have extraordinary leverage. Stock number 4 is Micron Technology, ticker MU. Micron is one of the world's largest memory chip manufacturers, and memory is the unsung hero of the AI revolution. Everyone focuses on processors, but AI systems are incredibly memory intensive. AI models are getting bigger. GPT-4 reportedly has over 1 trillion parameters. Training and running these models requires enormous amounts of high-bandwidth memory. Not just any memory, specialized high-bandwidth memory, or HBM. HBM is essentially stacked memory chips that can feed data to AI processors at incredible speeds. The demand for HBM has exploded, and there's a shortage of production capacity. Micron is one of only 3 major producers of HBM, along with Samsung and SK Hynix. Here's what's interesting. Micron was actually behind in HBM technology, but has been catching up aggressively. They're now shipping HBM3E, the latest generation, and they've secured major customers, including NVIDIA. As the third player in a tight oligopoly with surging demand, Micron is seeing both volume and pricing power. Micron went through a brutal downturn in 2022-2023 as memory prices collapsed, but AI demand has reversed that trend dramatically. The company has swung from losses back to profitability, and data center revenue is growing at triple-digit rates. The traditional risk with memory companies is cyclicality. Memory prices can be volatile. However, AI memory, like HBM, has different supply-demand dynamics than commodity DRAM. It's more specialized, harder to produce, and demand is more structural than cyclical.
Micron offers a unique angle on the AI chip shortage, the memory bottleneck. As AI accelerators get faster, they need faster memory to keep up. That creates a long runway for HBM demand, and Micron is ramping production at exactly the right time. Stock number 5 is Applied Materials, ticker AMAT. Applied Materials is the ultimate behind-the-scenes player. They don't make chips. They make the incredibly complex equipment that manufactures chips. Think about it this way. If TSMC, Samsung, and Intel are all racing to build new fabs and expand capacity to address the AI chip shortage, who do they buy equipment from? Applied Materials is the largest semiconductor equipment company in the world. Every advanced fabrication facility requires billions of dollars worth of specialized equipment for processes like deposition, etching, and inspection. Applied Materials is the leader in many of these categories. When TSMC announces a $40 billion spending plan, a significant portion flows to equipment suppliers like Applied Materials. Here's a key insight about the equipment makers. They benefit before the chips even ship. Chip companies have to order and install equipment years before production begins. So Applied Materials is seeing the benefit of capacity expansion now, even though that capacity won't fully come online until later. Applied Materials also has a significant service and spare parts business. Once their equipment is installed, they generate recurring revenue from maintenance and upgrades. This provides stability and visibility. The company has strong margins, generates substantial cash flow, and returns capital to shareholders through dividends and buybacks. They're also expanding their presence in China before any potential restrictions, diversifying their geographic revenue. Applied Materials is a leveraged play on semiconductor capital spending. As long as chip shortages persist and companies invest to expand capacity, equipment makers thrive. You're essentially betting on the build-out of AI infrastructure, which appears to have years of runway ahead. So there you have it, 5 semiconductor stocks riding the AI chip shortage wave. AMD as the NVIDIA alternative, Broadcom for custom chips and networking, TSMC as the foundational manufacturer, Micron for the memory bottleneck, and Applied Materials for the equipment build-out. These stocks aren't all equal in terms of risk and potential return. AMD and Micron are more volatile and have higher upside, but also more risk. TSMC and Broadcom are more established with competitive moats. Applied Materials is cyclical, but benefits from the long-term build-out cycle. Some investors might want exposure to multiple names to diversify across different parts of the semiconductor value chain. Others might prefer to concentrate on their highest conviction idea. The AI chip shortage isn't going away anytime soon. It's not a bug, it's a feature of a technology revolution that's happening faster than infrastructure can scale. These 5 companies are positioned at critical choke points in that infrastructure. If you found this breakdown valuable, smash that like button and subscribe for more stock analysis on the trends shaping the market. Drop a comment below with which of these 5 stocks you find most interesting, or if there's another semiconductor name you think I should cover. Thanks for watching, and I'll see you in the next video.